This is Mitch, and I'm here with Tim Berry and Jennifer Falloon, and we are going to be talking about taxfreefuture.com, how you can roll over your retirement plans into a self-directed plan so that you can take care of your future and your finances and not leave it to a bunch of yahoos who maybe don't care about your money as much as you do. Also, how to make some great returns on that money with a relatively low risk. You know, there's never anything that is risk free. And so there's always some amount of risk, but you want to, save a pot for your high risk stuff, but you want to save a pot for some for sure stuff too, is how a lot of people think about it. So Tim, how are you doing today?
I'm doing fantastic. Mitch, how are you doing?
Doing great. Tim Berry, for those of you that don't know, has spent over 2 decades specializing as an attorney in retirement and self-directed funds. So he is a nationwide expert on this topic. Also, we have Jennifer Falloon, and she's helping everyone understand, get signed up, and help them with their rollover or their setup of their IRA or their 401k or health savings account. There's all kinds of different accounts. The main thing is that we're talking about here is how to get them self-directed so that you can pick the kind of return you want to get and have some control over your financial life. So we're talking about how to loan money from your self-directed IRA. So let's say you have an IRA or a 401k or some retirement account. First thing you got to do is you got to get it into a self-directed a model where you can choose what you do. And that's where Tim and Jennifer come in on the topic of can you loan money? Tim, what do you say?
Sure. I mean, can you buy a corporate bond? Can I buy a bond issued by GM or by Ford? Yeah. What's that? That's just a loan of money to GM or Ford. So your self-directed IRA, your self-directed 401k can loan people, companies, entities, whoever, money. No problem whatsoever.
So we're going to pull it down, though, a little closer to the street. Can you loan money to a business person that you're enthusiastic about your rate of return and your risk reward quotient? Can you loan it to, you can loan it to anyone that's an arm's length transaction. Explain arm's length, Tim.
Well, arm's length is basically, it has to be commercially reasonable. You have to charge a reasonable interest rate. And also it can't be to anybody who's considered related to you, which means your parents, your kids, spouse, and those sorts of people and businesses they own and everything. But otherwise, if you got a business down the street who you think needs some money to get back on their feet after this COVID disaster, cool, loan them the money. Can you loan them and charge them 3% interest? Yeah, you could probably do that. Could you charge them 8% interest? Yeah, you could do that. Could you charge them 18% interest? Yeah, you could do that. So you're the man, the myth, the legend. It's up to you to determine what terms you want on that loan. And as long as the other side's willing to pay it, life is good.
Okay, so I think that's the number one question on there is, can I loan money, right, Jennifer?
Yes, it is. And that did come from Scott in San Francisco, but it seems to be a pretty recurring question, and something that our members that are signing up are super excited about. So yeah, so if you do that, what does that structure look like and what are some things they need to be aware of?
Okay, so let's just start with like a case study. So I'd like to throw my hat in the ring if you want to lend out money. I have a long track record. I have over 2 decades of borrowing money from private individuals and paying them back as agreed. I have right now I have about $24 million out on the street from about 36 private lenders. They're all great references. Most of them have been with me for over a decade, many of them over a decade and a half, and some of them over 2 decades. People don't keep loaning me money because they didn't get paid. They keep loaning me money because we're doing what we're supposed to do. But they don't just shake my hand and loan me money. I give them a first lien on the property that I'm buying with that money. And I never borrow, personally, I never borrow over 65% of whatever I think I can sell that property for, owner finance. And I average only borrowing that money at 58%. So to make it to break it down, if there's a house that I believe I could sell for 100,000, I average borrowing 58,000. I'll never borrow over 65,000. I give my lender a first lien on that property. This money's not commingled. It's not in a fund. It's just a lender loaning to a borrower, me, with a piece of collateral that ensures that, like, if I don't pay them as agreed, then they get that physical real estate asset that I gave them a first lien on. My commitment is that if I ever couldn't pay as agreed, which has never happened in my career, but it's also always a possibility, you always have to look at worst case, then I will walk the deed over to whoever I couldn't pay. But it's never happened. I've never filed foreclosure, never filed bankruptcy, never filed Chapter 7 or Chapter 13. I just pay as agreed. And that's why these people have been with me so long. Every deal stands on its own. Every deal, had a title policy. People loan the money. We get them registered at the local county courthouse, wherever that property is. And they're usually in San Antonio or Bexar County or surrounding contiguous counties, something very close to me. And they're listed as a lien holder on my property. So it's pretty simple. You get paid as agreed or you get a property. And like I said, it's never happened. I've never given back a house to anyone for any reason, because I know if I give back houses that people won't loan the money. So how is that structured? You don't just send me, or you shouldn't send anybody all your money. If you have 500,000 you want to get out, we just send over deals one at a time. Here's a house I need $70,000 on. It's worth, $130,000. Here's a property I need 80,000 on. And we just work our way up to whatever the amount is you want to get out, more or less. It's usually never perfect because houses and loans don't fall in increments that we can predict, but we just work our way up to that. And then we do official paperwork filed at the county courthouse representing that you have a lien. You should be able to get on your computer and look up the Bexar County tax records or the Wilson County tax records and see yourself as a lien holder on that property, which sufficiently clouds that title enough that nothing can really happen with that property until you're made whole or till something's resolved. Talk about the paperwork. What's typical paperwork on a loan to someone on real estate, Tim?
Well, it's pretty much the exact same thing that a loan for regular human beings would be. You're going to have the IRA owner is going to have the borrower sign a promissory note. The borrower is going to give them a lien upon the property, like what you said. And that's pretty much it. It's pretty straightforward. I like to tell people it's so simple, it's complicated.
Yeah, but don't make it too complicated. It's really just a mortgage and a deed of trust here in Texas. That's the paperwork we use. And you have a very official and very powerful position, So the only thing about when you're loaning money, if you choose, whoever you choose to loan to, if you're doing a real estate based collateral only loan, you just have to make sure that you're happy with that collateral, that if you don't get paid back your money as agreed, that there's a very tangible, very real piece of property that you're going to be more than happy to take in lieu of your agreement with your borrower. So the collateral's key. There's different ways to verify what that collateral's worth, but there's appraisals and there's comps in the neighborhood from realtors where you can show what similar houses have sold for in the area. Of course, my company, if you choose to loan to me, we'll load you up with that data to show you why we believe the property's worth. We don't just throw out a number and tell you it's worth X. We say it's worth X, and this is how we came to that conclusion. We might use rental income numbers and back into a value that way, and then we'll show comps in the area to show what other houses in the neighborhood have sold for, show the square footage and the bedrooms and the baths so that you make sure that the houses are comparable. You can't compare a 2-bedroom, 1-bath house sale in a neighborhood to a 3-bedroom, 2-bath house sale. So we get it down pretty tight. We're pros at it. If you have never loaned money before and you're going to go out on your own and go loan to people you don't know based on collateral, then just make sure you have a great attorney that understands real estate law in your city or your state. Really, it's a statewide license, right? And make sure you have some formidable documents that are approved by your attorney that, you know, protect you. And that's what you're looking for. You're looking for paperwork that protects you. What's great about when you hire your own attorney to do these paperwork is their job is to write the contract to protect you or in your favor, to make sure that, you know, first and foremost, you're the one that is the one that's protected the most in the agreement. You know, we want to be fair to both parties always, but your attorney's job is to look out for you. And that's what's great about having the documents drawn up. We've had documents drawn by attorneys, reviewed by multiple lenders, other attorneys, because, you know, when we send our documents over, sometimes they want to have them reviewed by their attorney. Ours has been through that process many, many, many times. And over the years, if there's been some little objections or some little kinks or chinks, we've honed them and honed them and rehoned them, you know, so that these days our paperwork's pretty darn acceptable to anybody and everybody. We haven't had any problems in years, anybody that reviews them. So again, if you're interested in that, you can just call me directly. If you're interested in talking to me about loaning me money, my phone number is 210-669-4020. I'm happy to give you plenty of references that span decades of people that have been loaning me money. If you're serious, of course, I don't want to just throw those names around haphazardly, but if you're serious, we'll get you in touch with those people. More than enough people to talk to. What's the other questions, Jennifer?
Well, time-wise, what are some time frames they need to be careful of or be aware of, if any, when they are lending that money out and, you know, they need to pay that plan back?
Tim, I don't think there's a timeline if you're loaning money. It's whatever the amortization is or whatever the interest-only period is. But what do you say?
I say, once again, it's so simple, it's complicated. I just had some clients loan someone else money for, I think, 2 weeks, and they charged 4 points on it. So it was a short-term loan. I've got other people who are doing loans for 30 years or so. So it's really whatever works best for you and your retirement lifestyle. And by the way, the money doesn't have to be paid back before you take the distributions. You could distribute out the promissory note, and there's all sorts of neat things you can do there too. So you got all sorts of flexibility with the making a hard money loan inside the retirement plan.
Yeah, it can be hard money or soft money. It doesn't have to be hard money, but what Tim just described as a very short-term loan is usually bridge funding. Like their contracts get ready to run out. They need a loan for right now until the bank finishes their paperwork and cashes everybody out, you know. That's a short-term, like a bridge loan. You usually get paid really handsome for those loans, but they're in and then they're out. They're usually less than 30 days. I, on the other hand, I'm borrowing money at least 5 years. I pay all the way up to 10% annual interest. I have a few choices, but you know, I can pay 10% if you want to give me a 15-year fully amortized loan. I can pay 9% if you want to give me a 10% fully amortized, I mean a 10-year fully amortized loan. I can pay 9%. You want to be a little shorter time with your money out, I can pay 8.5% for 15-year AM with a 7-year balloon. I can pay 8% if you want to do a 15-year AM with a 5-year balloon. And in some cases, I can do 5 years interest only at 8%. And then if you're just really, really conservative, if I borrow less than 40% on a property, or if I have a payout less than a fully amortized payout less than 7 years, I can pay 6%. And these are just over the top loans that have such a spread between the property value and the loan request that we ask for you. The spread is so big that it's very, very conservative. And the best thing that would ever happen in your life is if you didn't get paid as agreed and you got the properties back on those. But like I said, don't hold your breath if you're thinking or hoping that you want to get my properties, because I've never given a property back to anyone in my life. So I think there's one more question, right, Jennifer? What is it?
That was pretty much it, but just a reminder to please send any questions that you do have in to Jen. just JEN at taxfreefuture.com. Also, if you have a group or a business, or you're in a business and you ever want us to come in and present to your employees or to your group, we are happy to do so. And, just give us a call or email me at jen@taxfreefuture.com, and we're so happy to present and get that booked for you.
Okay, so the biggest pitfall when you're loaning money is that you don't have you want to make sure you have a first lien on the property, verified through a title company, and then make sure that that property's value is such that that if you don't get paid as agreed, that it more than makes up for that, and that you should be able to make whole or even make a lot of money by taking the collateral instead of the agreed upon payments. And that's the biggest thing. Establishing a true and real value is the biggest thing, and then making sure that that value is substantially more than what you're lending, so that you're very well protected. So this is a bigger subject than we're covering right here, but that's why Tim is here. If you're thinking about loaning out money in your retirement funds to get a return, please talk to some professional licensed attorney before you do it. Make sure that you're in good hands, that you feel good about the paperwork, that people feel good about the loan. Even get a second opinion if you want to on what these properties are worth, just to double check and make sure that no one's trying to pull the wool over your eyes as to the true value. And that's about it, man. I think that concludes this session. Anything you'd like to add, Tim?
Can't really think of it. You pretty much covered it. Just make sure you got good collateral and you're getting paid good money for doing it.
Yes. So when you make a great loan, it should be, if I get paid back as agreed, I'm very happy with the return. If I don't get paid back and I have to take the collateral, I'm ecstatic. I'm going to have a party because I'm just going to make some big bucks right now. The rate of return should go through the roof on that scenario. There's people out there you don't loan $100,000 on a $100,000 property, because there's no room in there for you to make up for any issues. So you want to have a good spread. In the case of loaning to Mitch Stephen and or his companies, you'll always have at least the 35% spread at the time of the loan, probably a little bit more than that if my average of 58% holds up. And anyways, that's about it. Again, Jen at taxfreefuture.com. If you want to speak to me or have a consult directly, you can email me at Mitch at cash4houses.net. That's cash, the number 4houses.net. Or just call me, text me. This is my cell phone, my only phone, 210-669-4020. I will be happy to talk to you. Just text me and say, I'd like to consult with you about loaning out money to you, and we're loaning you money, and I'll call you right back as soon as possible. All right, Jennifer, anything else?
Nope, that's it. We'll see you guys next week.
All right, thanks.
Thank you, guys. See you all later.
Bye.
Bye.